Welcome everybody to this week's Swing Trading Blueprint. Hope you guys are all doing fantastic. In today's video, today's podcast, we are going to be talking about swing trading, but how to swing trade full time. We're going to be talking about some tips, some tricks, and some things that I've learned over the course of 6 years swing trading full time on how you guys can go about it and how I made some mistakes and how you guys don't have to make those same mistakes. So guys, hope you guys all enjoy this, and like always, don't forget to check out our school. And right now, guys, with our school, it's really exciting. We're offering a super awesome 50% off sale for back to school day. Code school 50% off. It's absolutely fantastic. We got private live streams, we got quizzes, we got lectures, everything. If you want to take swing trading and trading serious, I highly recommend it. We have scanners on how to find stocks and all that stuff. So check it out. And let's dive into this here. So first, we need to understand what is swing trading and how it differs from other trading styles. So swing trading is when you buy a stock, you hold it for more than a day, but less than 1 year. Obviously, when you buy a stock and you sell a stock during the same trading day, that's considered a day trade. It's a different type of trading. It's a different style, strategy, all that stuff. Now, when you buy a stock and you hold it for more than a year, that's considered a long-term investment. It's actually a different tax bracket, and you're going to be holding, during earnings reports. You're going to start caring about fundamentals. So you're going to start caring about the revenues, the cash flow, the earnings per share, all of that stuff. As a swing trader, what we're really focusing on is finding stocks that are, or at least my approach is finding stocks on some sort of trend and seeing if you can follow that trend, seeing if there's a little sell-off, seeing if there's a little buying pressure, using short-term momentum to pretty much hop in and out of stocks. That's pretty much it. On average, I hold my stocks for anywhere from 6 to 9 days on average. Of course, at least right now, some of the stocks that we're holding, are a little bit of a, couple of month approach that I have with them. We saw a whole bunch of volatility in the market over the past week or so. So, what I did is during that volatility, I bought some. We're already up handsomely on all of them. So let's talk about transitioning to full time. This is a very common question I get asked is, Carter, how do you transition to be a full-time swing trader? So one of the things here is if you're coming from a W-2 9-to-5 job, what that job offers is stability. That's one thing that trading really doesn't offer. There's no guaranteed amount of money you're going to make. Compared to a 9-to-5 job, maybe you guys make $20 an hour. You're guaranteed if you work 40 hours a week, you're going to make about $800 before taxes. Now, trading on the other hand, there could be days, there could be weeks where you don't take trades or you actually lose money. So one of the things here that I would really recommend having is a little nest egg of savings. This is one of the things that I kind of wish I had when I did that first transition. Granted, I was a little younger, which obviously you guys know if you're younger, you just have less responsibilities. So now, if you have a car payment or a mortgage or whatever, you're going to need a fixed amount of money just to live off of. And as a trader, like I said, there's no guaranteed you're going to make that amount. So I would highly recommend having about 6 months of necessity expenses in a savings account. And what this is it's going to be paying your mortgage, it's going to be paying your car payment, all of those things that you can't live without. You're going to want to have a nest egg of, okay, well, this month maybe I broke even, right? So I will pull a little bit from that savings. Now, one of the things that I do want to talk about is, you don't make that jump. You don't just go from a 9-to-5 job to just quitting your job. I think that a lot of people think that's how it happens, but the reality of it is if you're quitting your 9-to-5 job, your trading should be outpacing probably double what your 9-to-5 job is making. So if that's just say you make on average at your 9-to-5 job $800, your trading should make a minimum of about $1,600 per week. And I know that sounds maybe like a lot, but by the time you factor in the taxes, by the time you factor in By the time you factor in a variety of things like the stability, because there will be times, like I said, maybe you make $1,600 this week, but next week you'll make $200. Now I got to pay your bills, you got to pay your stuff like that. So one of the things here that I think is very, very important is having a detailed trading plans that include your goals, your risk tolerance, and your strategies. So having that, and it will really, really help with your transition because you'll be shooting for your goals. You're going to have that risk tolerance, and more importantly, you're going to have a strategy. So one of the things here that I think is very, very important is having a journal. Having a journal, at least this one, the one that I use, I'll put it down below for you guys. But the reason why it's awesome is because you can really write out your checklist for entry. So what that does is it helps you choose quality stocks over quantity. You don't want to just trade random companies, you'll lose money. You want to trade these high quality picks that could do a lot of good for you. Another thing is you need to choose the right tools. What that is your software, your platforms, your brokers, your scanning. When I first started here, I pretty much I used Moomoo, and that was pretty much it. I really didn't even use Finviz at the time. But as you kind of do that transition, you need to have the best of the best brokers. You need to have brokers you believe in, you understand, and scanners that you understand. So I use Moomoo. I'll put them down below again for you guys. You guys can get up to 20 free stock by signing up. But more importantly, choose a broker that you guys understand and you guys feel comfortable with. You need to make sure when this is your job that you feel 100% confident in your trades. You're not trading because your friends are trading or because it's a good side hustle. No, when you do that transition, this is your job. So you're going to be fully devoted on your trades to bring in profit. And that's a huge eye-opening thing, and something really that you really can't even teach. Not teach, but it's hard to explain. And the reason why is because if you had a W-2 job, you had that stability. Oh, well, this week I lost a little money trading. I'll get it back next week. Well, no. If you're a full-time trader and you lose a little bit of money, you don't want a revenge trade, but you also might need to bring in a little money, right? So you just need to have the right confidence, the right tools. So I also think here another thing that's very, very important is just setting a daily routine. Just because you don't clock in at a 9-to-5 job doesn't mean you don't have a routine. This is one thing that I actually think I did very, very well is I've always stuck to a routine. And what that means is I will wake up at a reasonable time. As a swing trader, most of my positions obviously I'm going to be holding overnight. So what I do is I'll wake up anywhere from about 9 o'clock. I will go to the gym, and then I'll spend the rest of pretty much the whole day scanning for opportunity and looking for possible setups. Just because I don't clock in somewhere doesn't mean that I shouldn't be sitting and working, if that makes sense. Just because you're not getting paid hourly doesn't mean, you just need to have a routine, I guess, as a trader that kind of follows your strategy. And researching is very, very important because you can stay informed about stocks you're in on, sectors that are performing well. So yeah, I'll go through, just like every day I'll be looking at different charts, setting up watch lists, identifying trade opportunities. And this is what I do throughout the day. But another thing that I want to talk about, just as, one of the things that's just as important as your strategy is gonna be the psychology behind trading. Trading, I would say about 80% makes up emotion, psychology, and stuff like that. So that 20% is actually the charting. The rest is psychology, emotion based. And one of the things that I believe in is just being stone cold, right? Just following that checklist, choosing quality over quantity, and just making sure, like I've always heard Warren Buffett say, if you could trade or buy one stock, you would do research, you would understand that company completely. And I do have a very similar approach. I want to make sure the stock I'm not buying because my friends saw it, or I saw a YouTube video or TikTok or a Twitter post. I'm making sure I'm buying the stock because it follows my checklist, follows my approach, my strategy, and I have a good risk and reward with it, of course. Some of the things that I want to talk about, and these were kind of the common mistakes that I did when I first started doing that transition to full time. I really overtraded. I thought I had to be in an opportunity every single day in order to be successful. Over trading is very bad because often you'll be choosing quantity rather than quality, and you just need to take a step back, go back to that drawing board, that checklist, and making sure those stocks follow it. And then piggybacking off that is ignoring your plan. Every stock, every day, I always imagine it like a football game, right? I used to play football back in the day and baseball, and every single game you have a playbook. You understand your offense, your defense, everything. So treat it like a game. Treat it like a football game or a sporting game that you understand. So that means, okay, if the stock does this, I'm doing this. If it does that, I'm doing this. If it does this, I'm doing that. If it, understanding, sticking to your trading plan, your checklist, is very, very important here. The last thing I want to talk, or not the last thing, but another common mistake a lot of traders do is they just lack an education. Maybe you'll be successful for a month, and then the next month you're very bad. You're not doing good. Every day, every person that buys a stock is a student in the stock market. I don't care who they are. I don't care if it's Warren Buffett, Paul Tudor Jones, myself, Ray Dalio. Every person that buys a stock is a student, and the market will teach them something. If you look at it with a different approach, you'll be in a world of misery. And the reason why is because you'll buy a stock and lose money, and then you won't look back and go, oh, what went wrong? How can I implement this for future? You'll look back and go, oh, well, I'm still right, but I'm gonna try it here. It's just, guys, always be a student. Never, and never take anything for granted. Another thing here that I want to talk about is my course. Don't forget, guys, you guys can use code SCHOOL for 50% off, where we talk about how to find undervalued stocks, our approach, mindset, everything. If you want to take swing trading to the next level, I highly recommend it, guys. So, guys, we'll end it here. I hope you guys all enjoyed it. Make sure you guys hit that like button, subscribe, and follow us on YouTube, on TikTok, and Instagram. And don't forget to check out our school. And I hope you guys have an amazing rest of your day, and we'll see you guys in the next one. Take care.